Oil prices back below $124 a barrel, so a bit of relief, even though we do have petrol going up at midnight tonight. Is this a temporary thing because of the dollar weakness we've seen coming through, or are the supply and demand factors also at play here?
Stephen, I think there's always, as I always say, there's always going to be the fundamental market. There's always going to be the asset class that's trading. I think oil needed a bit of a relief, definitely. I think initially the bearish effect came in with Osama bin Laden naturally, but this is also a two-sided sword again, because is there going to be uprising because of this, or is it really going to settle down? So I think that's what's the pullback today, partly with smoothing with the euro dollar at this point. So I think we needed a breather to start off with, and maybe this is the breather we need. We know that there's about a plus minus a $20 premium, risk premium priced into the market due to the Libyan unrest, etc., that's been happening in the Middle East and North Africa. So, can you translate what happened in Pakistan as, bringing in some relief for that risk premium?
Well, what's your view on that, Derek? Because, as Riette was saying, if there is some retaliation, we could see more turmoil in the Middle East, which could then affect supplies, couldn't it?
Look, if I look at it, it just comes down to a question of predictability. And at the moment, and in the last little while, in the short term, oil has been driven by quite a lot of noise. So, as Riette said, the noise in the Middle East and the political unrest has really driven oil prices to the levels that we've seen at the moment. We did over the weekend see the bin Laden news prevail to the markets, and I think oil's trading on the back of all that noise at the moment. If you look at it over the long term and over the big picture, I think oil has had quite a long run, and you've seen it even in the Sasol share price, running towards 400 and possibly a little bit beyond that. But I think at this stage, a little bit of a pullback and some consolidation fundamentally from in the oil price is probably due. So I think it's a welcomed relief and a bit of weakness. Yeah,
let's chat about the demand factors then, because at the same time we had PMI coming out of China this morning, slightly disappointing, still above 50, though a little bit worse than expected. ISM in the United States also pulling back, although it's still very positive. Is there a concern out there about the demand coming from economies like China going forward for commodities like oil?
I think China is always going to be a concern. I don't think there's any doubt about it. What we do see they're doing, and if we can sort of link base metals to the energy complex, what they're doing at the moment is they're actually cutting a lot of their aluminium smelters in China to actually, and also what they're doing is they're also reducing some of their scrap metal plants. If you don't produce a certain amount, you're getting cut. So they are trying to address the energy, the energy issue, and I think this is an indication of how serious it could be. If we take away the nuclear, what happened in Japan, if we take away that, you're adding like another third of a country that's already, in the case of Japan, 10 million barrels a day. So you're adding that back to the market.
So this is all going to support the market going forward.
Exactly.
How's it affecting other commodities like coal?
Coal is actually been very quiet. It's kind of been boring since the beginning of the year. When we had the Australian floods, it was very well supported. And if you look at the spread between the coal and the oil, it was huge. It was more than $40 at some stage, where it's now trading on a one-to-one basis, which it tends to do. Coal often follows oil, and now oil is actually proceeded, in a positive territory compared to coal. So coal at the moment is quite, it is quite quiet, but the demand out of India and China for coal is huge. India is they currently do not have supply for coal. They're sitting in about 52 million tons a year of shortage that they cannot fill. They take whatever we can give them out of South Africa, they take.
And despite today's pullback in some of those commodity prices and resources stocks on the JSE, this has really been reflected in lots of those commodity shares, hasn't it, Derek?
Yeah, I think that's where you saw the pullback today. And if you just look at some of your dual-listed stocks and some of the London pricing on the likes of Anglos and Billiton, they were trading in line. But I almost got the sense that there was a little bit of an overreaction on our market in terms of profit taking, relative to global markets.
And that really came through this afternoon, late this afternoon.
It did, and you almost got the sense, I'm not sure exactly where the all-share index closed or where it's about to close, but it definitely looked like it wanted to close on its low, and it just seemed a little over-exaggerated. So you might find also coupled with that, you have a lot of holiday makers coming back from this long Easter period. Moving into May, there's typically a negative undertone associated with the May fever. So you might find a lot of local investors taking profit, moving into cash. I didn't see too much movement in the rand, so I think the sell-off wasn't really depicted by a lot of offshore selling. So maybe just a bit of risk aversion locally for our market, and on the back of that, really driven by those commodity stocks at this stage.
Yes, how about demand for the actual commodity? I know you launched an oil ETN a while back. You're launching a coal ETN sometime soon. Is there demand for the underlying from investors?
Derek, sorry, Stephen. It's quite a difficult question to ask, because South Africa is, we've got a lot of exchange control issues, and I think out there, yes, definitely worldwide, there's absolutely no doubt for investors looking for that exposure. I think locally, it's it's a new concept, and it takes a while to filter into the market. So I think it will develop. Definitely. Maybe not initially, but we're already seeing a lot of interest in that ETN. We get phone calls, numerous phone calls every day.
That's on the oil ETN.
And the coal that, we just came out and saying that we're launching it, basically. So there's definitely interest. I think coal is quite an unknown sort of commodity, if I can put it like that. It's sort of a mysterious market, and it's quite illiquid as well. So I think that plays a role, but I think definitely if we look at the amount of coal we produce, if we look at our quality, if we look at the companies we have here locally, we really are a very big coal player. I think we're fourth worldwide. So I don't think it's something the local investor can actually ignore on the longer term.
And with the ETN, you don't need to hold the physical, do you? No,
not at all. Not at all. You basically get exposure to the index, that's it.
Yeah. Perhaps your view on gold. We saw that gold price yesterday above $1,570 an ounce. It's pulled back quite sharply today, and we can chat about the gold stocks later, Derek, because that's really reflected in the gold shares as well. Gold price from these levels, would you expect it to maintain its upward movement? I
think we just need to put it into perspective what happened last week. I mean, there was very, very little liquidity in the market. It jumped $20 a day, pulled back 15. It was very illiquid and was extremely volatile. I think it consolidated now for a little bit, and to the upside, gold it's open. I mean, where can it go? 2,000, you don't know. There's definitely some support around 1,530, and then to the downside, obviously the psychological level of 1,500, I think, is the new very strong base that's forming.